The South African rand slipped against a strong dollar in early trade today, and that's as investors waited for the unemployment figures from Statistics South Africa, as well as the finance minister's budget speech tomorrow. Let's bring in independent analyst Mbuso Zulu to give us a sense of these numbers. Mbuso, it's great to talk to you. Thanks very much indeed for coming on. Well, at least one of those sets of information has now come in, with the Statistician General announcing the unemployment numbers. We're still clearly very much in crisis mode.
Yes, we definitely are. And this being an election year, there is some pressure that is on the government of the day to put measures in place that will alleviate that situation. And this will then in turn, I suppose, also inform partially the budget that we will receive later on today. But those numbers are showing a deterioration quarter on quarter, and it is quite a dire outlook for the economy and for the citizens of the country.
And how are the markets responding to the state of our country's labour market?
Yeah, it's a bit of a risk-off day on the JSE today. The markets are trading lower. You are seeing that the more defensive stocks, such as your defense and food manufacturers, are performing better, as well as your gold stocks. And the rest of the sectors are showing pressure and lower prices as a result.
So let's bring in some other market news this afternoon, Mbuso. Government bond auction today happening, and that's as Treasury, of course, looks for ways to raise revenue. How are South African bonds performing, and is there a demand for South African debt? And what are market expectations from National Treasury tomorrow? It's rather a loaded question.
Yes, so the auction has taken place already. It was actually quite a strong auction, and all the instruments that were on offer cleared very well. You have seen National Treasury issue on the longer end of the curve, and this was also in line with that. There is a view in the market that you will see the business dipping into the contingency reserves that we have. That's about 500 billion, or approximately 7% of GDP, that we have in reserves for emergencies. So if they do that, then it will mean that they issue less going forward, and it will be positive. It will be a positive picture for SA government bonds. The market has taken a liking to that thesis, hence why you are seeing government bonds actually performing pretty well today.
Yeah. There's a lot hanging on the budget speech tomorrow, isn't it? I feel like every year for the last while, whenever we build up to the budget speech, we talk about what a delicate balancing act it's going to be for the finance minister. I think more than ever, that's true this year.
Absolutely. I agree with your sentiments. It always seems as if it is a delicate balance, but absolutely in this period as well, the budget speech will be quite closely watched. We do have a revenue crunch as a country, widening budget deficits, and we have all these spending plans that we need to pay for infrastructure, the wage bill, and we actually are not collecting enough and generating enough in terms of revenue to be able to fund that. You've also seen that the budget has tended to, or the spending has tended to be more short-term in nature, and you haven't had as much of a buffer that has been dedicated towards capex investments, which will fund future growth for the country.
Yeah.
So it will be closely watched. There have been VAT hikes that have been muted. I don't believe that this will come to fruition, as it is an election year, as I said earlier, and the government will be hard-pressed to try and find sources to alleviate pressure on the consumer. And if you do institute a VAT hike, then that would be counter to that.
Yeah. You've named so many challenges: the budget deficit, infrastructure spend, our wage bill, a shrinking tax base as well. All of these issues, all of these various challenges, and yet we are also talking NHI.
Yes, for NHI, it's quite a stretch, really, and as far as putting forward a sustainable funding model for NHI, You've had a lot of corporates actually come forward and say they are willing to work with governments, but they haven't really been as warmly embraced by governments in order to try and find a mutually agreeable model where you will still see the existence of the incumbent private sector as well as governments, and leveraging on the infrastructure base and asset base that is already in place. It does on paper have a strong merit, but with this initiative by government and with the track record that government has to date, it does actually call for a bit of caution, and I would, a bit of caution from government side, and we shall see how and in what form it will be instituted going forward. Yeah.
Some disappointing news as we started our conversation around unemployment numbers. There's also some company news sort of around that issue. Kumba planning to cut jobs despite its headline earnings per share soaring by over 20%. What's the logic there?
Yes, as we know and are well aware of, the mining sector has been pretty hard pressed to deliver on better profits that we have seen in the past years. They have been hit by rail derailments as well as failures on the infrastructure side, rail infrastructure side and equipment. And this speaks directly to Kumba's challenges that they have experienced in this period. They did have to cut production, and for the year production was lower by 5%, and revenue was slightly higher. Sales increased by 1.6%. And the increase in sales is mostly as a result of better iron ore prices, especially towards the tail end of the year last year, coming out of stronger demand from China, given the government stimulus that was in place there. But going forward, given the picture on the infrastructure side, especially on the rail side, it has led the company to embark on a review of operations. And coming out of that, they do concede that with the current infrastructure challenges, they will be producing less, and with a lower production, it will also result or lead to a need where they have a lower workforce. So at the moment, they are looking at about 490 jobs that will be affected, including fixed contracts. But this is still going to be subject to a negotiation process with the unions and trying to find how that picture can maybe be improved upon. And also, in addition, there will also be approximately 160 jobs that will also be affected from external service providers. These jobs will either be re-scoped or terminated. So this just adds as well to the dire picture in the economy. You did have yesterday as well, Amplats also announced job losses. And so you are seeing that across the mining sector, there is pressure from an operational perspective, leading to companies taking these hard decisions. Yeah, absolutely. Mbuso, anything else moving markets in mid-morning trade? So far, it is just in anticipation of the budget speech that's weighing heavily on the market's mind, and then just digesting as well the reporting season. We are in reporting season, so digesting just the results as they're coming out of mining stocks, and the overall picture is that production costs are increasing and companies are needing to take these hard decisions in order to contain profits and to sustain operations. Yeah, absolutely. And of course, as we've been discussing, we are awaiting the Finance Minister's budget speech tomorrow. Mbuso Zulu, great pleasure talking to independent market analyst.